I feel like most people, the thought of coming up with a hefty down payment can make the dream of home ownership seem like a nightmare rather than a dream. But what if I told you that there are accessible real world scenarios and programs out there that can help you reach the dream of home ownership without having to come up with the 20% down payment that you think you might need to? So today I'm joined by Bethany Yoakum, our local mortgage expert, and we're going to talk about a lot of these down payment assistance programs. We're going to work through what a down payment really looks like and what the purpose of it is. And we're going to dispel a lot of these like myths and nightmares that a lot of people are having around down payments. And make sure you stick around to the very end, because we're going to talk about a lot of links that you can access that will get you directly to these down payment assistance programs. And that way you can get started today rather than just like wandering around where they might be. So Bethany, let's talk about what a down payment really is. What is a down payment? What's the purpose of a down payment?
Yeah, so a down payment on any loan, if one is required, because there are some programs out there that do not require a down payment at all. So what it is from a lender's perspective is a down payment it reduces the risk of the lender, of whomever is lending you money. They kind of look at it as skin in the game, right? So if you do default on the loan, they're going to default on a little bit less, right? Because you've already put some money down. And so the down payment directly impacts what we call the loan to value ratio. And so that's compared, the loan to value, basically how much is your home worth versus how much of the loan that you have. It's kind of basically what it sounds like. And so the higher loan to value, the higher your loan is to the value of your home, is a higher risk loan typically, versus if you have a larger down payment than a value, you have less of a loan amount because you're putting more money down versus the value of the home, it's less of a risk, right? And so, I mean, if you think about it, if you are buying, you're buying a car or whatever, right? You have less of a risk of defaulting on that loan. If you're putting, if you're buying the car for $60,000 and you have $30,000 to put down, you're only lending on $30,000. One, the payment is lower, right? Because you're not borrowing as much. Your loan amount is lower. And then two, you already have $30,000. You have 50% skin in the game. So you don't want to default and have the bank take that car away from you, because you will be out $30,000. So that's where that skin in the game comes from. And so it's kind of a risk assessment from the lender. And there's minimum requirements depending on what loan we go with.
Right on. So the lower loan to value, the lower the risk to the lender.
Yeah, more down payment, less risk, less down payment, more risk.
Good deal. So what are some of the benefits of a larger down payment versus a lower down payment?
So we kind of touched base on it a little bit. A larger down payment means lower monthly mortgage payments, right? You just mentioned that if you have a larger down payment, you're borrowing less than if you were to borrow the entire amount of the home. Like some of those 0% down programs, your loan amount is higher. So when you're spreading out your mortgage payment, typically over 30 years, there's more to spread out, right? And so that payment is typically higher than if you put a larger down payment. Like if you're buying a $350,000 loan and you're putting $50,000 down, obviously your payment's going to be less on a $300,000 loan versus a $350,000 loan. So a lot of times when you do have that large amount of cash, say coming from the sale of a previous home, you can buy more home because you're putting more money down, because it makes that monthly payment more affordable. Yeah. And a lot of times also with putting more money down, because it's a less risk, specifically with all loan types, but it really comes into play when we're looking at conventional loans. If you're buying with a conventional, the more money down, the less risk to the lender. And, a lot of times we hear, well, I don't have 20% down, I don't know if I can buy a home because I don't have 20% down yet. You don't have to have 20% down to buy a home. If you do have 20% down, higher mortgage, less loan, higher down payment, what it does, because it's a little bit less risk, is the conventional loan does not require mortgage insurance. So conventional loans have what we call PMI, private mortgage insurance. So it eliminates that. So that also can lower your monthly payment because you don't have the mortgage insurance financed or itemized on your monthly payment.
So especially on a conventional loan, if we have the 20% down to put down, we can eliminate the need for the private mortgage insurance.
Yep.
Right on. So that would save a couple $100 a month in PMI.
Yeah, definitely.
Monthly payment.
It's all a risk assessment. Buying a home for lenders is how much of a risk are you? And so when you're putting 20% down, they basically are saying, oh, this is way less risk. We don't need the mortgage insurance, which is insurance to the person lending the money, right? And so that way, if you were to default, there's a little bit of insurance of how much they get back if you do default. So if you're putting 20% down, they're like, you're probably not going to default. Studies have shown that if you do that, that's why they didn't just come out of nowhere with that. I mean, they've ran numbers and came up with 20%, right? So they don't feel the need for the 20% down. So it's a less risk.
And with that PMI, with the private mortgage insurance, does that come off at any point during the loan if we don't put down 20%? Yep.
So if you put less, so conventional loans, you don't have to put 20% down. You can, right? If you have the 20%, it eliminates the PMI. You have the option, though, the minimum down on a typical FHA loan on a single family home, so one unit, and you're going to live in the property, is 5% down. So if you put 5% down and eventually the value of that home, as home prices appreciate year over year, which they typically do, then once your loan to value reaches 78%, then it comes off.
Okay, and that happens automatically.
Yeah, you can do it earlier if you think, but you have to go through, you have to work with your lender and prove the equity if you think it's sooner. But based off of the original value, yeah, it does fall off naturally at 78%.
So one of the other things that we're seeing, especially with some of the buyers that we're getting under contract today, is that buyers that are having a little bit more of a down payment are able to write a little bit more of a competitive offer. And they tend to be able to get into homes a little bit easier just with that stronger negotiation position. What kind of things are you seeing in terms of the larger down payment and financial stability and being able to negotiate like that?
Yeah. So again, when somebody has more money to put down and a seller you see this when a seller is looking at multiple offers. If somebody's coming down and they're really tight on funds to close, or we're not sure they're going to be able to save enough by closing, a lender has to prove that you have that much money in your bank account prior to closing before you can get what we call final loan approval, right? Or clear to close. And so that could delay closing. That could stall. And if we can never verify that you have funds to close, we can't close unless we verify that you have the funds. If somebody already has the funds, that's a stronger buyer. And so that would be in a better position for the seller to say, I know that you're going to buy my house. There's not going to be any delays because we have to go move to Albuquerque and my job starts in 35 days and I can't wait. And we're buying a home down there. There's a lot of things going on. There's so many moving pieces that we're trying to piece together. So that stronger buyer that we know can close versus one that we're not, it's a little more risky. They're probably going to take that stronger buyer over the riskier one because they know that there's more security in that purchase and that sale, because maybe the sale of this current home that they're leaving is contingent. They need to sell it to buy a new home and so many moving pieces. So yeah, it's more secure for them. So typically that's an offer that's going to be chosen over another one.
Thinking about moving to Fairbanks? Well, click on the link below for my free relocation guide where I talk about top schools, top neighborhoods, and so much more.
Having a larger bit of a down payment definitely gives you a little bit more of a stick to swing around when you're writing offers, for sure. And you're right, it's exactly what we're seeing too. Buyers with much more financial stability are able to negotiate from a much stronger position.
Yeah.
Every day.
Yeah, exactly. If there's no contingencies on your pre-approval, you have the money, everything's good to go, and the other one's contingent on funds to close. The one that's not contingent is going to be stronger. Mm-hmm. And most likely be chosen over the one that is.
Although, having a huge down payment is great to have when you've got it. It's not always available. So in those kind of situations when we don't have a down payment that's readily available, what are some down payment assistance programs that might be available for folks, here in or in Fairbanks?
So, and saving for a down payment doesn't always make sense either, because there are lower options. And with the homes, if you have the 20%, it's great. But it's not all, like I said, you don't always have to save up. Sometimes it can take years to save 20%, and you could have missed out on the home that was perfect for your family, or the home that you wanted to buy 3 years or 4 years from now is going to be $50,000 more, right? And you would have just paid mortgage insurance. So it would have been better to save for 5% versus 20%. And then eventually, as long as you have the money for the 5%, you should be fine. And that mortgage insurance would eventually fall off if you have a conventional loan. There are some down payment assistance programs or closing cost assistance programs out there. Sometimes they're far and few. It all depends, especially for those grants, ones that aren't a loan, and then there's really there's no tie to them. Like, you don't have to repay them, right? It's just forgiven after a specific amount of time. We do have some of those. So in Alaska, we have what's called an Alaska Housing Finance Corporation. And so that program does offer different types of, they're specifically, you have to be an Alaska resident to qualify for those. So if you're coming in from out of state, you're probably not going to qualify unless you've been here for a minute and you've established a driver's license, basically, is what you need to show that. But they do have some down payment assistance. They have some tax credits, and they do make things a little bit more affordable with some lower down payment options. Even if it's not a grant, sometimes they just ask for a little bit less, specifically if you're looking to buy a duplex. If you're using a conventional loan to purchase a duplex, and then also some lower interest rates too, to make the housing a little bit more affordable. So that's a good program out there. Another one that we haven't really touched base on are just some other programs that offer lower down payment options. Obviously, if you're VA, you're probably aware, if you're active duty military or you're a veteran, then you have the option of utilizing your certificate of eligibility for your home loan. And that is a 0% down program, which is wonderful. We do a lot of those up here. It's a very military town, so we do a lot of that. Also FHA. So FHA is backed by the government as well. And so they offer lower down payments. So instead of 5%, if that's hard to do, that's hard to save up for, and money's tight for everybody right now because the economy is crazy, inflation's crazy, credit cards are maxed out. Money is hard right now. Like, it's hard to have excess money. Savings accounts are lower right now. We're seeing that those are not, people aren't storing up their money in the savings account right now. So an FHA loan is a very popular choice for first-time home buyers. But the minimum down on an FHA loan is 3.5%. So a lot of times that opens up some doors, to open up more doors to people, because 3.5% is a little bit more feasible than 5%. There's also a conventional product. There's either a first-time home buyer, so you haven't owned a home in the past 3 years or been on title in the past 3 years, definition of a first-time home buyer, but also if you, there's income limits in the area, so every area changes, but you could potentially buy a home with 3% down as well on a conventional loan. So that's another option. We do have one lender that we work with, because we're a broker, that has a 0% down FHA loan. That one is not a grant, but really it's essentially like a second loan. So you are essentially having a bridge loan on the 3.5% down. So you don't have to put the money down up front, but you're going to, it's what it is you take the 3.5%, it ends up being a 10-year loan, and it's added onto your monthly payment. And so payment's a little bit higher, but a lot of times it allows you to get into the home if you don't have any money right now, and you could potentially refinance the home down the road, pay that off, and have back to like a normal FHA loan or a conventional loan to drop off that second mortgage.
Yeah, that sounds like an awesome opportunity.
Yeah, that's a really good one too. Another really cool one that we have here that a lot of areas don't qualify for it, is the rural development, what we call USDA. So it's another 0% down program. Because we're such a rural area up here, a lot, like all of North Pole qualifies for that program. The only difficult thing with that is with the rural development program, it's just difficult to qualify for right now, with interest rates being really high and the purchase prices being higher as well, because they're really strict on debt to income ratios. So that one could be a little bit higher to qualify for, but if you can, it's a really cool program to utilize.
Yeah, I mean, as far as I understand it, it's like in Fairbanks, it's from Farmers Loop and out is the rural direct like zone that is available. So
Yeah.
um,
And it's just
everything from
you
Farmers
just
Loop in.
just type in the address and see if if that home qualifies for the program.
Yeah, we can put the link down in the description below for the rural direct USDA
Yeah.
links and stuff. So yeah, that'll definitely be there because that is another great opportunity,
Yeah.
especially if you can qualify for it.
Yeah, exactly. So we can help you get there. Yeah. And then there's some other grants and stuff that you can try to use that are out there. A lot of times they get the funds get scooped up pretty quickly. So you have to jump on them usually pretty fast. But they are out there.
Yeah, we work with a ton of local folks all over Fairbanks and North Pole too that do provide grant services. So if you have questions about those, you can always give us a call 907-885-0316 and we can definitely talk with you about those. Were there any others that we needed to touch base on?
No, I think we did. I mean, your standard loan products, you have conventional, which is just a brief overview. So you have conventional, which is 3 if you qualify, 3% down, 5% is the minimum, 20% down if you have it, and it eliminates your private mortgage insurance. FHA, the minimum down is 3.5, and we do have the one product that is 0% down, but your payment's going to be a little bit higher because you're essentially financing that down payment. And then we have VA and USDA loans that have 0% down. So those are your basic loan products.
That's awesome. So it sounds like we've got, and there's tons of local grants and opportunities as well to help with down payments.
Yeah. And these are all referencing single family homes. Sometimes it changes specifically for conventional loans. If you're buying a duplex or 3 or 4plex, some of the guidelines change for that. So always check with your lender that you're working with to make sure that you guys are on the same page, that they know that you're buying. If you are buying a 2 or 3plex, that they know that, because the guidelines do change for those.
Right on. Well, that's a ton of information. Thank you so much for your time. We've talked about all these different loan products, grants, all these different services and programs that are available to help you get over the hump of the overwhelming thought that we've got to have this 20% down payment all the time. So it's not exactly true, and we've got some answers for you just in case. So if you ever have any questions, you can reach out to Bethany as well. Her information's always down in the description below. You can give us a call 907-885-0316, or you can check us out on our website www.fbxhomesearch.com.